All right, here we go. Subscriber orientation number 3. Welcome everybody to Hedgeye. My name is Matt Moran. I'm here with my main man Robert McGordy
Good
to
morning.
to walk you guys through how to use Hedgeye.com, how to use our education center. So what we've done is we've developed this new program for all the new subscribers out there to try and point you in the right direction in terms of what resources we have available to you guys, how to use your subscriptions, and also identify Hedgeye University for everybody, which we highly recommend everybody go through. So right here we have Robert McGordy. For all the new people that don't know who Robert is, Robert is somebody that was a subscriber just like you guys just a couple years ago. He's somebody that started on Hedgeye back in 2020, I think it is.
2020, yep.
2020. We've since brought Robert inside to help shepherd all of our new subscribers and teach them how to use the process, how he used the process, and how to really get started with Hedgeye. So, Robert, anything you want to say to start off?
Yeah, no, I mean, I think like a big thing is, it takes a while to get a good feel for the Hedgeye process, right? So there's a lot of different tools in the toolbox that you can leverage. I think trying to have as many tools in your toolbox is crucial. The more that you add, the better that your kind of foundation and the house that you can build will be. And so yeah, I mean, I think, just as a reminder, when I did subscribe or when I was a subscriber, I had a full-time job, right? So like, for those that have to manage the full-time job in addition to executing and kind of, wanting to be a portfolio manager on your own accounts, I get that piece, right? So it's a big, there's a lot to do, but you can, I know, I have faith that you can, get there and get to executing at a really high level. So thank you for joining us today.
Awesome. So, everybody, we put a slide deck. You'll see it underneath the video, I believe it is. That's going to have our tour guide stops for the day. The first stop we're going to take is going to be the Hedgeye Education Center. So if you don't have a link for that, open up that slide deck and everything's going to be linked in there. So first stop is, like I said, Education Center. So this is the first place when you just sign up to Hedgeye. So we have a bunch of people with new subscriptions here. You need to be going to Hedgeye University. So it's hedgeye.com/education, or hit the link that I sent over. The reason why, we have gone through and built this 90-minute investing masterclass with how to use the Hedgeye process. We've spent a crazy amount of time to get this set up. So first place you want to do is actually go through and take Hedgeye University. So you can do that here right in the education page. It links right to Hedgeye University. It's 43 lessons, 90 minutes of content. Each one of these lessons is designed to get you started with Hedgeye. So we talk a lot about A/B testing. And we can have Robert sit here and talk about A/B testing all day. And Robert, right off the bat, what is A/B testing? Because it's two components.
Yeah, so it's the nowcast model and then the VASP, so the volatility adjusted signaling process. You kind of, the signal trumps the quad or the nowcast, but you really, both go hand in hand. And when you've got bullish trend signal from the VASP and that lines up with a positive quad environment, so typically a quad 1 or quad 2, then that's kind of, all systems go for that exposure.
So you're talking right about the GIP model, essentially, to start off, right?
Correct. Yeah. Yeah.
So everybody's seen this slide. It's updated on the macro show slide deck. If you don't have access to the macro show, simply graduate Hedgeye University and you get a free subscription once you graduate. So, Robert, this is the quad model. It's part of the A/B test. So you want to walk people through essentially what this
Yes.
slide is showing?
Right. So GIP model, GIP model, those acronyms stand for growth, inflation, and policy. That's what really drives and impacts our nowcast. So sometimes Keith, I often refer to it more as the nowcast model. But so this is the quad environment. So as you can see, there's 4 quadrants, pretty standard stuff, but it really is all dictated off of growth and inflation in terms of, for the most part here in the quad. So growth accelerating is on the top half of the x-axis there. Growth decelerating is on the lower half of the x-axis. Then on the y is inflation accelerating and inflation decelerating is on the right and left hand side. So that's kind of how you want to think about it. What we're seeing for the next 3 quarters upcoming is 3 quarters of a quad three environment where you've got growth slowing, but inflation staying, basically, stickier for longer, or certainly higher for longer, perhaps with small accelerations as well on a quarter-over-quarter basis. So that's really kind of what we're doing there. I think if you do get Macro Pro, and just a huge shout out to the macro team right now who are currently doing the Q4 macro themes call, they recently added more monthly basically assessments of the GIP of the nowcast and the influences there of what's driving the quarterly nowcast expectations and conditional probabilities. So if you just keep scrolling down, you're in the macro themes, right?
Yep.
Yeah, so if you just keep scrolling down there, I think it's slide like 10, no, 16 maybe. So it's
Going down to 16.
it's a new deck. I haven't seen this one yet. So keep going. You're gonna get the month. There you go. So there's real PCE on a monthly basis. So that's what I'm referring to. Again, so we're kind of recently in the last month or so, we were breaking it out more on a monthly basis. So you can kind of see the accelerations there and decelerations as well. So on the bottom portions is the quarterly assessment, and then on the top half is the monthly kind of numbers that are rolling in. But we're tracking this very, very closely, and yeah, so that's those monthly numbers drive the quarterly nowcast and expectations. But we can pop back over to the other one.
Let's see, Keith just started, I think, macro themes just now.
Yeah, it just started 9 minutes
So here
ago.
he is. Oh, he's running through the slide right now.
11 a.m. There you go. Look at that. Real PC. Talking about the monthly. It's like it's kind of important, Matt.
Yeah.
It's kind of important.
So you have McGordy covering it, and you have Keith covering right now in the macro themes call, which is live for Macro Pro subscribers. If you guys have questions on how to access that, email support@hedgeye.com.
Yep.
And we can answer those questions. What's on that subscription versus your current subscription, what you need to upgrade. Like we said before, also graduating Hedgeye University puts you in that spot as well. Diving back in the Education Center to kind of show you what we have here for everybody. We reviewed before the quarterly investment outlook, which had those slides in there for you, which we update each quarter. So you'll see another one this quarter updated as we're updating it right now live with Keith. You can see a lot of this is going to Hedgeye University. That's how important we think it actually is for you to understand our repeatable process and actually execute the Hedgeye process. I maybe try and type it out for you here. Keith can pitch it to you here, but everything's saying go into Hedgeye University. Spend the 90 minutes. If you are a new subscriber, you need to spend that 90 minutes, take notes, and literally learn how to do what we are doing, what we're talking about, to make your life very easy. Education Center has a couple other things here for you as well. This is where we're going to have all of our replays for all of our free events. So if you're looking for a real conversation, that's going to be put in here. We literally have 100 plus of those, I think, available right now. So that's 100 hours of investing content, pro to pro investing content for you there as well. We also have a beginner's guide here. So Robert has 23 episodes that we've done, and that is for maybe a step above orientation level, I would say. It may get into the weeds a little bit.
Yeah, it does.
Which is good. We want to get in the weeds. You guys want to know how to use risk ranges, right?
Yeah, and I think a big thing too, Matt, which we've talked about in the past, but basically beginner's guide is driven, I answer questions from subscribers, whether it was from, Twitter, the arena, or just, things that we're kind of sending to support. So, we did our best. As I said, we did 23 episodes. There's 3 to 5 questions per episode. So I think we have Cells probably knows the number because he clipped them all, but I want to say there's like 120, maybe even 150 different clips. So and we're continuing to add to those as well. So couple different playlists, leveraging the process, and kind of basically expanding and kind of learning more about our products, and then kind of the macro and stuff like that. So definitely a great place to go. I think if you get through Hedgeye University and you still have some additional questions, go to the YouTube page, run through a bunch of those beginner guides, clips. We try to do our best in terms of labeling them. There's a number of questions that we get constantly on for instance, the eyeball table and how to read it. There's, I want to say, at least 2, if not 3 to 4 on eyeball alone, but also just like risk ranges. What happens when an ETF Pro exposure gets removed from, like how to handle kind of a removal of an ETF Pro exposure. How to navigate kind of a phase transition between a bullish to bearish trend, phase transition, stuff like that. So again, it's kind of, I think in terms of um, kind of ways to continue to expand on leveraging the process, Matt, would be Hedgeye, beginner's guide, then weekly notebook review, which I also host, and then macro show is certainly right in there. And Keith,
Yep.
every day kind of grinding through what he's seeing on a global macro scale. But at the same time, he's not going to kind of go into the weeds on some of the beginner questions, right? Because that's sort of what I'm here for, and I'm here to help. So please, if you got questions, throw them up into the arena. It's a great place to have some really phenomenal conversations between subscribers and stuff like that. So post them there, post them on Twitter. Just kind of bang the drum, right? And just say, hey, I need further help on XYZ subject matter.
And we're here for you.
And we're here for you, right? We're here for you. Perhaps we'll just point you towards the direction of a beginner's guide or somewhere else, but we'll certainly do our best to help you out and help you execute at a high level.
Yep. So the way to get to those individual clips that we're talking about is simply on this page here, click a beginner's guide on YouTube. And that's going to open up a huge playlist, literally how to use risk ranges, how to use the early look. What do the multiple dots and real-time alerts mean? So this is getting in the weeds. So as you grow as a Hedgeye subscriber, as you're using more and more of our tools and newsletters, recommend diving in here, and we're going to answer most likely all of your questions. And if we don't, type them in the chat beneath right now, or send them into support@hedgeye.com, like Robert said. Post it in the arena. We are there as well to try and point you guys the right direction. I'll show you guys where the arena is in a minute. If we keep diving into this one page here, you have Keith's reading list. You'll hear him reference these books in the early look and in the macro show. We list them here for you as well. I'm not sure you guys will be able to do the same level of reading in terms of Keith cranking out a book a day or every other day. Good luck with that, but they're listed for you as well. Obviously, all the orientations, like the one you're seeing right now, are going to be on here as well. Post your questions here, and we have also all the replays from the previous orientations. Like we said, we are on episode 3, so episodes 1 and 2 are available for you right there as well. This page does a great job of also letting you guys know what events are coming up. So one big event for everybody coming up, we have Hedgeye Investing Summit on, October 10th, 11th, and 12th. Mm-hmm. So you guys will start seeing a bunch of information on that. We have 9 pro-to-pro conversations coming up. We have done a great job getting some really good guests. I think going to give a lot of information, especially at these key inflection points, which seems like happen each week.
Yeah, no, exactly. And we got a great Hedgeye Nation kind of meet and greet happening next week, October 4th in Charlotte. So if you're in the general kind of Carolinas region, you want to come up for want to join us in Charlotte, by all means, please email support@hedgeye.com and you can get additional details on that. We also got the Hedgeye regional event in Chicago. That's going to be our final regional event for this year. We in the past, or last year, we did 3 of them. This year we're just sticking with 2 this fall. Our schedule just have gotten just wait a little bit too busy here. So Las Vegas was a huge success. Matt and I had a blast meeting a ton of awesome subscribers in Vegas a couple weeks ago, and we've now got Chicago on November 9th. Chicago is basically our second largest institutional presence as well. So that room is going to be filled with very robust list or massive brain power in terms of just investing and kind of portfolio management, stuff like that. So I think it's going to be a great conversation, a great room to be in. So Hedgeye Regional, exactly. Great job, Matt, pulling that up. So November 9th, we're actually going to do a little Bears game, I think, that Thursday night as well. So look for additional details there in terms of getting basically hanging out with the team at the Bears game too. So should be a really great event in Chicago. And then we're also going to do a meet and greet in Toronto on November 30th. So I just wanted to kind of throw that out there. We haven't really splashed that around anywhere, in a broad way, but again, November 30th, we're just in the process of sort of trying to sort through where that's going to be. But David Salem and I will be up in Toronto on November 30th. So yeah, look forward to kind of meeting our Canadian friends up in my homeland.
Yep. All right, so we have all the events listed here. If you guys are interested, obviously it's support at hedgeye.com. We'll give you all the details you need for that. Moving down here, you can see we also have all the institutional events coming up, and anything you would have had access to for free as being a Hedgeye subscriber. So obviously, big thing we just went through last week was free all access week. I highly recommend all the new subscribers diving in here. The link is in that slide pack for you. This is a great way to take a look at all the other tools that we have. We try to list it out what we post each and every day. So diving into this, obviously, you're going to see things like the early look. So if you don't have the early look, here's a great example of it. The macro show, ETF Pro Plus, the call, risk ranges, investing ideas, market edges, and obviously the tier 1 market situation report. One thing that is part of this that I highly recommend everybody goes through and watches is going to be the macro themes coaching session we held last Monday. This is
About 45 minutes.
about 45 minutes of Keith diving into the process.
Yeah, it was one of the better. So I learned position sizing back, during the COVID times, it was Keith and Daryl, basically the only two in the office here, right? And so, we had a lot of new subscribers at that point. And so he did answer a decent chunk of kind of like bringing people up to speed on the macro show. But this was what I would call kind of like an old school review in my mind of some critical kind of, basic components of the process. And in particular, he spent probably, I think it was about 10 or 12 minutes right out of the gate on position sizing and walking through kind of longs and shorts, max position sizing, volatility, adjusting them. He did a great job on the call today as well, reiterating that. Brian had some questions about how to kind of review or how to risk manage and portfolio manage, bones, aka, small caps that have an opportunity to perhaps be, 2, 3, 5 baggers over the course of a tail duration. And so, yeah, so he again, we're doing our best. I think sizing is a piece of the puzzle that is crucial for everybody at home in terms of just better risk management. And it was, he launched it off in Vegas in terms of reviewing for that room, just position sizing itself, and obviously launched off the coaching session here too. So it's a crucial piece.
Yep, that's available to you guys free all access week. Highly recommend spending the 45 minutes, actually 54 minutes, watching this entire video. But the first 10 to 15 minutes really do a good job, like Robert said, of laying that groundwork, especially with position sizing. That is where we know a lot of subscribers get hung up on. A lot of people like to dive in pretty heavy, and that's not really what the process is. So this is our team. We're trying to explain what the process is of portfolio management with position sizing.
Yeah, I think a huge piece that I always reiterate is at Hedgeye we believe in preserve, protect, and then compound, and it's always in that order. And I say that a lot because I think it's crucial, right? It's preserve, protect, and then compound. This is not a get rich quick, trade 0DTE options for 300%, returns. I'm not saying that you can't leverage the process to do that, but that's really not our, it's Hedgeye risk management. So it's all, risk management. It's all about preserving, protecting your hard-earned capital, and then compounding it in the kind of areas where we find have the best, probable return opportunities, right?
Yep.
So right now, with the quad 3 environment and that inflation staying stickier and longer, we've been long inflation for since basically kind of early July. And that's been a great trade. He's on the screen right now. He's showing you URA, and that's a good example where its performance is up plus 20% or around 20% since we added it to ETF Pro. So just a great use of your time. I think this weekend. I think that's a big piece too, Matt. Is like you got to kind of fit it in to your schedule, right? If you're spending time, if you're Netflixing on a Saturday night. With your partner, what have you,
It's called Netflix
or your friend.
and chill. Netflix and chill.
Yeah. Well, I didn't want to kind of imply the chill piece, but that's okay.
Yeah.
Anyway, but it's the Netflix thing. Rather than Netflix, watch Keith for 45 minutes. Listen to the Notebook Review on the way to work. Right, we post that up on all of our podcast channels. Seltzer gets that up as soon as we possibly can. Basically once we wrap on live on Twitter Spaces, but that's up across all the podcast channels. Just kind of like fit it into your schedule, right? So if early look, if you can't get to it right as soon as it comes out at like 8 o'clock, or the macro show at 9, pop onto it during lunchtime, right? Or that evening, spend 30 minutes, after the kids go to bed, or what have you, and take diligent notes during that macro show, and just sort of get caught up on what's been happening.
Yep. So you actually hosted a weekly notebook review this week.
I did yesterday.
I think the easiest way to find that is going to be on our YouTube channels. It's also going to be on our podcast channels. So we're making all that available to you here as well. All right, so you're gonna have access to it. So it just got posted a couple hours ago.
Yesterday, yeah. So that got posted yesterday. Again, it goes up across all
Just a watch
YouTube,
that, yeah.
YouTube, Apple, Spotify, across all of our podcast channels. So we try to make it as easy to kind of consume. You can also catch it live on Twitter Spaces. So again, this is for Hedgeye Nation. The weekly notebook review was curated and kind of started by a number of Hedgeye Jedis that just want to kind of talk process, talk about the signals that they were seeing from how things were changing from the weekend work to midweek, and how we were going to be moving or adjusting the portfolio going into the end of the week, next month, next quarter, et cetera, et cetera. So that's really the concept, and it's for Hedgeye Nation, right? So if you want to join live, you have the ability to jump up and speak and ask any questions or comment yourself in regards to what you're seeing inside of your portfolio. So always, it's always a better time when we get that interaction amongst members of the community.
Yep. All right. So going into your main research feeds here, guys, always click the Hedgeye at the very top of the screen. That's going to drive you right to your main pages here. On your right part of the screen is going to be the research that you have. This is what's available to you. Obviously, mine's going to have quite a bit, 'cause it's include all of our pro subscriptions too. But it's always going to be in chronological feed for you here. So Robert, when you were on the other side, when you were a subscriber, you were leveraging right off the bat products like the Macro Show,
Yep.
Early Look,
Yep.
and Risk Ranges.
Exactly.
That's where you started. Why did you start with those three?
Well, those to me are kind of like the base pack, right? So we bundle that now as the core macro package, Matt, which I think is a great like starter pack. So early look is a phenomenal. Well, we bumped it in the risk ranges, so we'll go risk ranges first. So risk ranges gives you the immediate term range in regards to kind of the probable outcome for price to the upside and the downside. So again, just to read it there, you don't have to scroll that much further down. So you got the 30-year treasury yield. So that's the yield. So it's bullish yield there. You've got the top end of the risk range in terms of 480. You got the bottom end of the risk range at 4.42, and you got the closing price, which is yesterday's closing price of 4.73. So that's kind of how you read it, right? So in terms of the yields, you'd be a buyer at 4.80, and you'd be a seller at 4.42. Conversely, basically, that's the inverse because those are the yields. So that's like the inverse to say TLT, but TLT would be bearish trend, and we're not really anywhere on longer duration, really rates in general. In fact, we're really short rate exposure, just generally in terms of XLU, XLRE, that kind of thing. So I think the other big thing here that Matt, you added when you were in charge of this earlier this year was the trend change at the top. So we highlight, like, for instance, the Canadian dollar moved from neutral to bullish, natty gas moved to bullish, and gold changed from bullish to neutral today. So those trend changes are massive. You got to kind of be paying attention to the bigger picture there in terms of the phase transitions, when things adjust, et cetera, et cetera. So the risk ranges are just a great daily tool to understand kind of how the signal is working. There's a number of beginner guides about kind of reviewing risk ranges and when to or how to assess kind of things making higher highs, higher lows. That's a double whammy, right? If you get a bullish trend and the risk ranges are making higher highs and higher lows, that's kind of like the holy grail in terms of things that you want to have exposure to within your portfolio. So that's kind of risk ranges. The early look is just a fantastic write up in our piece of research in terms of getting an assessment from Keith primarily. I think he probably writes it about 85% of the time. But kind of what's happening in the market, what's transpiring out there, what's going through a seasoned veteran hedge fund manager, and his expectations are kind of, what are the big pieces of information that he thinks are important on that morning. And then the macro show is just a great summary in terms of, again, what are the important pieces, what new information has kind of adjusted on a day-over-day basis. The top three things are critical in terms of just the big call-outs of what's transpiring on a global macro scale. There's a beginner's guide episode reviewing the entire macro show deck, so we won't really get into that here today, Matt, but I think there's just it's very purposeful in regards to what we include in the deck, right? So everything that's there are there because the team and Keith, like, we're reviewing them every single day, and we're reviewing them daily. We're reviewing them consistently. We're writing down the numbers that are on the page: volume, price action, what's transpiring on across volatility complex, right? The CFTC futures contracts, how are the general kind of consensus position, the eyeball table, et cetera, et cetera. So it's all very, very important, and I think crucial to sort of have in your as a tool in your toolbox, let alone the commentary from Keith and the questions from Hedgeye Nation on the macro show.
In all these slides, we essentially have a snippet, at least a clip, for you guys to actually understand how to read each one of these slides. They're updated every day. Like Robert said, they're updated every day, and they're reported into Keith and put in the macro deck each and every day for a specific reason. This is what Keith is using. These are some of the inputs coming in from his colleagues, Christian Drake and Drago and
Richie,
Steiner,
exactly.
Richie,
Yeah, I mean,
like
basically, it hits my inbox. I'm lucky enough to be on that email from Richie. I mean, it's basically there by around 4:30, and because Keith's day basically it starts at 4:30, so he's delivering usually delivering the top three things and the risk ranges by 6 a.m. To the team here. So, that's, again, I mean, this is like we're up early, we're grinding early, and we're grinding for Hedgeye Nation. So if there's a comment or if there's something that we're calling it out because we're finding it to be an important piece of the overall puzzle from a risk management standpoint that everybody needs to be aware of. Now, you don't have to take action on that in your own portfolio, but you should be aware of it, right? So, you should be aware of it, and then you can make your decision as to how you take that piece of information and deploy it and make adjustments or no adjustments in your own portfolio.
Yep. So a couple other helpful things for you guys with the site. Our team hand selects clips from each one of our events and tries to get the most information for you. What's the biggest update you need? So if you didn't watch the call today, we're going to try and handpick 2 or 3 clips that is super important for today. That's going to be, remember, just click Hedgeye at the very top and scroll down, and you're going to see all of that available for you here. Our editorial team does a great job of doing this. You see a lot of flashbacks, see a lot of the chart of the days listed here for you guys. So highly recommend going into that. Also, you have that search function there. Not many people realize that's there. You can go through and click on that. You can actually search for all the materials that are in there as well. So use the search, operates just like a normal search or Google does. So recommend doing that. Also want to point out, you also have account settings. You can go through and turn on and off things that you want to get emails to. So sometimes people only want to see things on the screens as opposed to actually getting a million emails each day, which sometimes can happen when a lot of things are happening, a lot of movements happening. Each one has its own module, so simply click into these. One thing we like to say in each one of those orientations is if you don't have access to one of these tools, graduate Hedgeye University. And when you, as a graduate, you get a free subscription. So if you need real-time alerts for part of your process to see what the open signals are, because right now you can see there's only 4 up there. which means he's taken off all the longs and only shorts.
Yep.
That's information. This is important parts of subscriptions you guys need. So getting access to it super easy. Go through, spend the 90 minutes in Hedgeye University on the education site, and we'll turn on access for you. So in terms of questions, I'm not sure if we have any questions on there. We've covered all of our bases already. Do we have any questions on the Slido?
No more comments. So Diana, thanks for all your wonderful feedback. I really appreciate it. It's great to hear that you're enjoying, that you found good value out of Hedgeye, beginner's guide, the coaching session. So awesome. Thanks, Diana. I really appreciate it. But yeah, no, we don't really. So Diana, if you got any questions for us or anybody else who's tuning in, by all means, we're here to help. I think just as we wait for maybe some questions to roll in, Matt, do you mind showing the the account settings and just kind of how to navigate
Yeah,
or,
I've got my different account up.
Oh,
so it
okay.
gives
No
you
worries.
that
All right, no
one.
worries. So you just go look at a prior episode then, and we'll walk you through that. I think the other piece that is important though is to highlight a couple basically free stuff. So Red Eye Green Eye app is a free app you can find in the at the Apple or Android store.
Had about 5 alerts on that yesterday.
Yeah. So, thank you. Yeah, there you go. It's at the bottom of the screen there. So, Red Eye Green Eye app. That's on the S&P 500 on SPY. Basically, it's Keith, sharing the signal in terms of, buy, snoozing, or sell. It's currently in sell mode. The other thing too, for real-time alerts, if you're a subscriber of real-time alerts, there is a real-time alerts and RTA app as well. So you do have to be a subscriber for that one. That is not free, but that's a great way of staying, cognizant of what's happening while you're on the go. You can. It used to be, it still is my favorite. I do travel kind of back and forth from the office here, so when I am on the road, it's great. It's great to get pinged and kind of stay very abreast. The RTAs in particular have shifted over the course of the last 18-ish months, where they've become a phenomenal coaching tool. So there's fantastic coaching notes inside of the RTAs now. So it goes beyond just kind of like the symbol and ticker and that kind of thing. So so keep track of that. It's whether you trade the RTA or not. I think it's that is less important than being conscientious of where Keith is finding opportunities to either buy or sell something, and then the coaching notes that are attached to them. So fantastic tool there. And then, as I said, kind of all the podcast channels, YouTube channels. We do a lot of kind of like free webcasts, free stuff out there, right, Matt? So kind of keep an eye on that. Hit the follow button on the Hedgeye podcast channels. The Ami, Freebird, and Felix do a fantastic unscripted equity curiosity podcast as well. So that comes out. That's every other week, typically released on Saturdays. So keep an eye out for that one as well. And then so we do our best to try to combine it all. But I think that's kind of some other free stuff, some other free components.
The one other feature we forgot to show people is the arena. So
Oh, sure.
on hedgeye.com, guys, top left, you have your hamburger menu there, has all of your subscriptions in it. Very top, you have the arena. And this is a subscriber only discussion board. I'm a big fan of this stuff, usually for West Virginia football, but also for the arena. This is where subscribers are asking questions. So when we go back actually into risk ranges, it has its own board. So risk range signals, select that right here. Getting the message, the arena, I guess, for risk ranges. And people are going through here asking questions. We have a bunch of helpful links posted for everybody as well. Ask questions. McGordy jumps in here and answers some questions for people and tries to point people the right direction as well.
Yeah, Keith popped in yesterday too. He gave the trade and trend levels for gold, and then also the immediate term trade range for uranium as well. So he's popping in. When I kind of ping him when the time is right. So don't expect him to be living in there, but he's we kind of got an internal discussion here where so he's on board, kind of popping in when it's right. So look for more of that kind of interaction. It's been great to have Keith in the mix in the arena too. So yeah, so as I said, kind of any questions you guys got, throw them up in there, and I'll either answer them on the arena, or if it should be kind of more of a broadcast here on the orientation, we can do that, right, Matt? So yeah, this is a kind of a newish show. So if you guys got any suggestions as well, drop them in the arena there under that new subscriber orientation post, and we're happy to kind of navigate things as most helpful for you guys. Like this, we're here to help, and I think that's the biggest thing.
Yep, we're here to help. So if you guys have questions, like Robert said, drop in the arena, hit support@hedgeye.com. With that,
Awesome.
I think episode 3 is in the books. Oh, we got
there's
a question.
Oh,
Look at
sorry.
this.
Thanks.
It's exciting.
All right, Diana, I'm loving it. I would like to understand more about the implied volatility and Z-score slide and how to use the info. I have a chance to watch any videos on it. Okay, cool. Yeah, so there are 2 or 3 on a beginner's guide inside of, I think it's more on the learning the process link there, Matt. So what I'll do, Diana, is I'll find it if Matt can't. It's under learning the process. I'll
There you
tag.
go. How to review the eyeball.
Yeah, how to review the eyeball table. There's at least 2 in there. So take a look at those, Diana. But the most important thing from an eyeball standpoint is kind of the Z-score. So you've got the trailing 12 month, the TTM there on basically that in this right here. It's like that orange column next to 1 month ago. So you got the TTM, which is trailing 12 month Z-score, and then you've got the 3-year Z-score, I believe it is. So the trailing 12 month, basically plus or minus 2. That's something that you should be writing down. So it doesn't necessarily have to be negative on the page in order to get a negative Z-score, just as an FYI. But yeah, anything, I've kind of expanded it just to get basically a broader brushstrokes, I guess, of kind of really plus or minus 1.5, but certainly kind of anything around 2 or greater than 2. That is getting kind of circled and highlighted, right? So that's kind of the best way to look at it and to review it. Obviously, any kind of negative eyeball discounts is sort of showcasing more of a complacency in the market for that particular piece of inventory. Anything that's kind of green or has a positive eyeball premium, that's where basically some protection is being bought, and yeah, so that's kind of what's how to kind of read through that. I think if you the way that Keith often talks about it is if you get an eyeball premium in something that's in a bullish trend at the low end of the risk range that's been making higher highs and higher lows, that's a great setup, right? So, and conversely, if something is in a bullish trend but building a negative eyeball or an eyeball discount, I should say, and it moves to the top of the risk range, maybe you end up selling a little bit more, especially if that Z-score is a kind of basically 1.5 to 2 times plus, right? So that's kind of how you would use that inside of the portfolio management side of the puzzle.
Yep. All right, guys.
All right.
Episode 3 in the books. Hit support, hit the arena. We're here for you. Welcome to Hedgeye.
Absolutely.
Thanks, guys.